Alright, so this is just a trend review of the Dow. As you can see, there was a rally over here, and it was a buy signal. And this leads me to believe that, there's a diagram, I forgot in which part of the Wyckoff course, and I'll try to explain it in just a sec. So, you basically have these waves that go up and down and up and down and up and down, right? But what is happening here, here, at these pivots, at these turning points, even in a trend, I have this type of behavior. What is happening here? What is happening here? What is happening here? Here are all these points. What you have is accumulation and distribution that is happening. And this is different than the accumulation and distribution that most Wyckoff style traders are used to, because they've seen a diagram that shows a preliminary demand, and then selling climax, secondary test, sinus strength, spring, and other sinus strength, LPS, and then uptrend, all of that. Okay, so what we're talking about here is the turning point. And at the turning point, there is minor accumulation and distribution that occurs all the time, because traders are loading the boat at these points all the time. And I'm going to show that and prove that right now. So over here you have a turning point, right? So this is a pullback to a support area, right? You see this level, and goes to that area and it turns. So at that point, demand has to be greater than supply, and most of the time it's very visible and tradable. All right, or enough of the times, or I shouldn't say most, but enough of the times. So at this point, what is going on during this rotation, during this turning point? What is going on? All right. So what I'm saying here is, market's going up. There must be accumulation that's occurring here. Demand has to outpace supply. Demand has to be stronger than supply. Demand means that there's more buying. So one way to detect that, and I'm going to show exactly what's going on here, is with the point figure chart. I mean, it's going to be apparent on other charts as well. I'll just use point figure because it's so, in this case, it's very, very important, very easy to see. Alright, so I am going to explain and show that over here you have accumulation. I'm bringing the point figure chart in that circle. You can see it now. In that area, you see I'm highlighting that area, and now the point figure chart is also being highlighted. All those 1, 2, 3, 4 overlapping bars. What's going on? Now you go to the point figure. What happened is you had average volume of okay, this down volume is the bag holding. You have a hell lot of volume here. The down average volume was 5,422, and down volume was 13,000. It was almost 300%. All right, so again, look at this. Here, down volume average is 5,422, but the down volume that came in is 13,277. So there's bag holding because it's not really breaking through. It's just testing that area, not breaking through. So there's a lot of volume, but not a lot of reward. A lot of effort, not a lot of reward. A lot of volume, not a lot of price progress. Why? Bag holding. Okay, bag holding is accumulation, and in this case, it's accumulation on the down wave. All right, that is occurring right here at that turning point. You have this occurring, and then what happens? It reverses up. That's like your sign of strength or heavy buying. How much buying? 19,000 contracts on this up wave or up column when the average is 7,114. Again, average is 7,114. The volume is 19,000, almost 20,000 contracts. Almost again 300%. You are seeing the turning point and the accumulation associated with the turning point right here. First in the form of effort reward, and then in the form of a sign of strength. Or you could just call it buying, you know. So heavy buying or whatever. So this is occurring, these two, this buying on the way on the down, on the drive down, the effort reward here, and on the way up. These columns, this volume is all occurring on the bar chart right in this area. So that leads me to believe that this pivot is not a bullshit pivot. It's not just like what is it called? Like a zigzag or a swing something. But it's important because at this turn there is accumulation. Buying low on the turn as the market is turning here. You see the heavy volumes come in, buying on the wave down and buying on the wave up, buying on the bar down and buying on the bar up. Okay, so that's all you need to see. After that, it goes higher, right? So on the wave down, we saw the heavy volume come in at that level, and that's enough to cause a rally. That's enough to say that demand is greater than supply. This is what is meant by the law of supply and demand, um, or at least like the application of the law of supply and demand, showing that demand is greater than supply, creating a turning point, a turn in direction leading to this swing up. Now, what do you want to look for on the swing up? The answer is the same damn thing. All right. So when this goes up, especially at important levels, I want to see smart money sell. Just like here, smart money was buying. I saw smart money buying. Up here, I want to see smart money selling. Buy low, sell high. And this can be done trend and counter trend, because for day trading purposes, according, Wyckoff is well known to say, like, the only trend that matters is the immediate trend. For swing trading, you have to trade with, the market and primary trend and all that. But for day trading, there's 1 to 3 trends a day, depending, on the volatility. So this was the move up, and I explained the accumulation that occurred here and created this rally up or this swing up or this move up. And now eventually what are they going to do? They're going to sell. So the idea is to be able to see the selling, right? And it's not really that easy. Like, you kind of get used to it because sometimes one chart will not show you a good picture. Like a 5 minute chart sometimes sucks, but sometimes it's good. So I use different types of lower time frame charts and automatically like detect the buying and selling at these areas, at these turning points, because sometimes it's just not apparent, on one type of chart, and we don't know which chart shows the price volume the best, right? You don't know. Like, the market is very tricky in that you'll see a 5 minute chart and it just doesn't stand out. Sometimes the tick chart stands out. In the case that I showed, it was a point figure chart. It's like blatantly obvious. Look at this. Okay, see, look at this. Price is going down, right? It's going down. All of a sudden, it go down, down, no buying, no buying, no buying, no buying, get no buying. And now look at this. It's a lot of buying, right? So, more buying. Again, here, there was buying. This is buying on the down wave. They bought it on the down wave here, 9,000 contracts or something like that. 11,754 they bought. This is also accumulation. And then what do you like, after that the market's going to go up. This is heavy volume selling. Market's going to go down. Heavy volume buying. Market tend to go up. But it's not that easy just looking for high volume, because it has to be coordinated. Like, you really need to be able to see support resistance levels and just have some sense about, you know buyers and sellers coming in at these levels and buying. And then the idea, what Wyckoff said, is basically to join, and that's all there is. And many times, you're right. I look for more here. Watch. There's a block, 18,000 right here. Contracts goes up. This here is a little tricky because it's effort reward, but it's hard to detect. You have to see the background, and in the background you can tell that this is a block of accumulation, and then with this volume coming in, and all of this is a base of support, and testing this area and going up. So you have to use some intelligence, realizing that this heavy volume is effort reward is actually bullish. Here you have effort reward, bearish effort reward, go down. So it's like, you have, I don't know, just draw your lines, support resistance lines, and see what's going on in the pullbacks, and seeing the accumulation distribution. But I would say this: it is very obvious that many of these swings, there are turning points, and in those turning points you have accumulation and distribution, as I've showed here. you know Sometimes they're buying on the wave up, sometimes they're buying on the wave down, and sometimes it's both. So, a high volume down can be very bullish when it's effort reward. because they're buying at the best prices, lower prices. Anyway, I'm done. Thank you. Have a good weekend. This is for educational purposes only. I'm not an advisor. Trade at your own risk. Have a good day. Bye.